Heading back to earnings now, and Adani Ports is gaining in trade after delivering a strong performance in the third quarter. Consolidated revenue soaring as much as 22% on a year-on-year basis. We also spoke about the latest updates on the data front as well, on the cargo handled, and that is looking positive. The EBITDA margins also stood at around very close to that 60% mark. Let's listen into what Whole-Time Director and Chief Executive Officer Ashwini Gupta had to say about the growth and the path ahead for the company.
Hello, and thanks for allowing me to share APSEZ's Q3 FY26 results. As India's largest and world's fastest growing integrated transport utility, APSEZ has once again demonstrated exceptional performance and continues to build on its legacy of creating shareholder value driven by responsible capital allocation, operational efficiency, and elevated customer experience. During the quarter, APSEZ's revenue grew 22%, driven by growth across all business verticals. Logistics and marine business grew 62% and 91% respectively. International operations crossed the rupees 1,000 crore quarterly milestone, and domestic ports grew in mid-teens. YTD FY26, we continued to gain all India cargo market share, including the highest ever container market share at 45.6%. Importantly, we focused on profitable growth. During the quarter, marine and international ports EBITDA more than doubled, and logistics and domestic ports EBITDA grew 26% and 15% respectively. Driven by all-round EBITDA growth, I am delighted to increase the top end of our original FY26 EBITDA guidance by rupees 800 crores. We have a massive focus on capacity expansion. We recently closed the acquisition of the 50 million ton per annum NQXT Australia terminal. We have multiple initiatives underway across our Indian ports, including rupees 16,000 crore Vizhinjam Phase 2 expansion, liquid and container terminal in Mundra, expansion at Dhamra, Ennore, Kattupalli ports, and new Haldia terminal. We are increasing footprint of our asset-light logistics services to cover more trucking routes and higher international freight forwarding volumes, along with expansion in physical logistics network. Marine is another area of focus where we are adding vessels in the Middle East and Africa waters with definitive customer contracts. While pursuing large-scale expansion, we remain focused on responsible capital allocation and balance sheet strength. During 9 months FY26, we generated healthy operating cash and kept our leverage under check to below 2x. Moody's has revised its outlook on APSEZ to stable from negative while reaffirming its ratings. And moreover, Japan Credit Rating Agency assigned A-/stable rating to APSEZ, a notch above India's sovereign rating. APSEZ continues to set the benchmark for operational and sustainability excellence. Mundra became the first Indian port and among few global ports to handle a very large crude carrier that berthed directly at a jetty. APSEZ became India's first integrated transport utility company to adopt the TNFD framework, which is a global benchmark for responsible infrastructure development. Looking forward, we remain firmly on track to achieve 1 billion metric ton of cargo volume and our FY29 targets of 65,500 crores of revenue and 36,500 crore of EBITDA. I take this opportunity to thank our stakeholders for their invaluable contribution to our growth trajectory.